Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. Our topics for this week: topic number 1 from Oneroof on the 15th of July, homeowners taking out low interest green loans warned on break fees and rate hooks. Topic number 2 from RNZ on the 15th of July, is it worth paying a real estate agent to sell your house? Topic number 3 from One News on the 17th of July, Apprentices dropped as builders struggle with the downturn. Topic number 4 from RNZ on the 15th of July, the return of the property investor. But why? Topic number 5, interest.co.nz on the 15th of July, New Zealand should destroy the idea that the economy is linked to house price growth. So first up for this week in review from Oneroof on the 15th of July, homeowners taking out low-interest green loans warned on break fees and rate hooks. And as always, the links to all of these articles are in the show notes below. More New Zealand homeowners are using green loans to improve their homes with solar panels and double glazing rather than buying electric vehicles, mortgage experts report. While banks like ANZ, ASB, BNZ and Westpac offer up to $80,000 at low or zero interest for energy efficient upgrades, most applicants now focus on home improvements like insulation, heat pumps and window replacements. According to Tala CEO Andrew Chambers, interest in EVs has declined since the Clean Car Rebate ended and new road user charges were introduced. In contrast, demand for solar installations has increased. Banks confirmed strong uptake of their green loan offers, though few provided specific figures on what the funds were used for. BNZ noted a shift from vehicle purchases to making homes warmer and more efficient, while Westpac and ASB cited double glazing and heat pump installations as among the most common uses. ANZ said transport-related borrowers tended to draw down more than those focused on homes. Kiwibank also provides green loans through its sustainable energy loan, supporting solar, wind, hydro or geothermal installations. New Zealand Green Building Council CEO Andrew Eagles supported the trend, highlighting the financial, health and resale benefits of energy-efficient homes. However, he cautioned borrowers to be mindful of repayment terms, as unpaid balances could revert to higher mortgage rates. He encouraged homeowners to seek professional advice to ensure value from upgrades. So in other words, make sure that you talk to your mortgage advisor to get the best green loan for your situation. Topic number 2 from RNZ on the 15th of July, is it worth paying a real estate agent to sell your house? Hiring a real estate agent can cost about $30,000 in commission on $1 million home, but according to research from property data firm Cotality, the investment might be worthwhile. Cotality's head of research, Nick Goodall, noted that homes sold through agents tend to achieve higher success rates and sell faster. Over the past decade, about 76% of agent-listed homes were sold, compared to just 65.1% of private sales. In 2023, the gap persisted, with agent-listed sales reaching 65% and private listings just 52.8%. Private sales have accounted for a small share of the market, ranging from 3.1% in 2021 to a high of 8% in 2016. Last year, that figure was 7.6%. Goodall said agents often have buyer networks and know how to target potential purchasers more effectively. They also typically close deals faster. At the market's 2021 peak, the median time on market for agent sales was 24 days versus 40 days for private ones. Last year was an exception, with agent sales taking a median of 75 days, which is slightly longer than the private sales at 71 days. Properties sold through agents also tend to command higher prices, though this may partly reflect the fact that higher value homes are more often sold through agents. In 2023, the median sale price for agent-listed homes was $740,000, compared to $662,500 for private sales. Still, Goodall said that the data doesn't definitively prove whether agents deliver enough added value to justify their fees. For example, a $750,000 sale through Barfoot and Thompson could incur nearly $24,000 in commission. While the price gap between agent and private sales is significant this year, it was narrower in 2022. He also pointed out that private sellers need to factor in the time, effort, and potential opportunity cost of handling a sale themselves. Real estate professionals echoed similar sentiments. Agent Brooke Gibson, who once sold a home privately herself, acknowledged the appeal of DIY selling, but said most people benefit from an agent's experience, especially during negotiations. Wellington agent Mike Robbers added that agents often market properties more effectively and price them right from the start, avoiding the common pitfall of cold listings that linger unsold. Buyers may also expect lower prices from private sales given the absence of commission costs, Robbers said. Real Estate Authority, REA Chief Executive Belinda Moffat, emphasised that whether to use an agent depends on the seller's experience, property type and situation. Licensed agents are legally required to act in their clients' best interests and follow professional conduct standards. Sellers working with agents also gain access to a market appraisal, tailored marketing plans and legal guidance, including advice on disclosure obligations, key factors that could help prevent future disputes or failed transactions. Moffat added that commission rates are often negotiable and sellers who choose the private route should educate themselves thoroughly about the process. Confidence in the real estate industry, she noted, rose from 70% in 2021 to 82% in 2023. Despite strong buyer demand, Goodall said high listing volumes continue and price flexibility remains crucial for sellers. Many, he added, are still struggling to accept that prices have softened from the market's peak. So my personal thoughts on this are that if you've got a good real estate agent, they're worth their weight in gold because they can certainly market the property and talk to people on your behalf, which removes the emotion out of that negotiation process. Also, chances are the real estate agents have had more practice with negotiating on properties than you might have as an individual. So think carefully before you decide to sell the property yourself, because life's short. So use the professionals. Topic number 3 from One News on the 17th of July. Apprentices dropped as builders struggle with the downturn. New Zealand's construction industry is grappling with declining demand, widespread job losses, and growing concern over future workforce shortages. A recent survey shows over 2/3 of builders are struggling to secure enough work, with more than 1/3 reporting project cancellations. New Zealand certified builders Michael Bottrell said business closures were becoming more common and some apprentices were being let go due to a lack of work. The electrical sector is also feeling the pressure. Apprenticeship rates have dropped to their lowest since 2011. Although the industry currently has an estimated shortage of 6,000 electricians, the impact has been masked by the economic downturn, according to Master Electricians Chief Executive Alex Varaniak-Wheeler. She warned of a double whammy when demand returns. Not only will there be a shortage in workforce numbers, but also a gap in skills, particularly in emerging technologies. With about 20% of electricians retiring each year and fewer new entrants, the sector risks being unprepared for a recovery. Industry leaders are calling for more government support, including targeted funding, updated immigration policies, and incentives for employers who train apprentices. Electrician Darren Matthews, who recently laid off 2 staff members, said these cycles of boom and bust are familiar but concerning. He highlighted the need to bring younger workers into the trade to replace the ageing workforce. Despite the downturn, some apprentices remain hopeful. Elijah McIlvray, an apprentice electrician, described his experience positively and saw trades as a strong career path with broad learning opportunities. Construction Minister Chris Penk expressed confidence that demand would soon return, but ruled out direct government intervention, saying that the sector would eventually face a labour shortage again as activity picks up. Bottrell agreed that while conditions are challenging, maintaining optimism is vital for the industry to push through. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as an experienced investor and a financial advisor, and all of our free events are available live and online. Check out propertyapprentice.co.nz for upcoming dates and register today. It's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals with our complete wraparound service, you can also book a no-obligation phone call or meeting with my husband, Paul Roberts, via the website. Topic number 4 from RNZ on the 15th of July, the return of the property investor. But why? Recent data from Cotality indicates a renewed interest in property investment, with mortgaged multiple property owners accounting for 23% of home purchases in Q2. That's an increase of 21% since last year. In cities like Auckland and Christchurch, that figure reached 26%. According to Cotality Chief Economist Kelvin Davidson, the growth is largely driven by small-scale investors, those owning up to 4 properties, including their home. Their activity rose from 12% to 14%, with many targeting lower-priced properties. Their share of purchases in the bottom 30% of the market climbed from 21% to 24% compared to last year. Davidson noted a shift toward buying existing homes, likely due to the loss of tax benefits previously tied to new builds. However, despite increased buying activity, long-term forecasts remain modest. Infometrics predicts house prices will still be 20% below their 2021 peak when it's adjusted for inflation, well into the next decade. Rental growth is also expected to stay subdued, supported by weak migration and rising housing supply. Davidson pointed to a number of headwinds for investors, including tighter debt-to-income rules, less favourable tax treatment, and no expectation of interest rates continuing their historical downward trend. Many investors are also wary of rising costs like council rates. Still, property continues to be viewed as a reliable investment. Davidson explained that despite lower expected capital gains, many still trust the asset class due to its tangibility and perceived stability. He highlighted recent policy changes, such as adjustments to loan-to-value ratios, the shorter bright line test, and the return of interest deductibility as key motivators. He added that lower interest rates have reduced the cost of topping up rental properties significantly, making investment more feasible for average owners. Serena Gibbon of the Auckland Property Investors Association agreed, suggesting that long-term confidence in property remains strong. She said many investors now see property as a tool for income stability rather than wealth creation, especially in uncertain economic times. Gibbon noted that property offers leverage and control that other investments lack, and current investor interest seems more about financial security than chasing capital gains. Infometrics forecaster Gareth Kiernan added a cautionary note, saying that while investor activity is rising, it's rebounding from very low levels. Investor mortgage numbers remain below pre-2022 figures. He believes the increase is likely driven by improved tax settings and falling interest rates, but doubts whether the trend will continue given market fundamentals like declining rent growth and slowing population gains. My thoughts on this are, at some stage, the tide is going to turn when it comes to net migration. Also, we are seeing an increase in investor interest as well. And I think it's common sense to focus more on cash flow than on capital growth, since capital growth you've got absolutely no control over. So basically, this is what we've always taught for the last 15 years. Control the things that you can control. Don't make your investment decisions on things that are outside of your control. So my perspective is that with rents softening, that's great for tenants. And it's also puts things in a much better light as far as investors are concerned as well, especially if we get a change of government. Because at the moment, cost of housing is not high on their radar. It's not a problem when people are finding rents a lot more affordable, and also home ownership is the most affordable it's been in years as well. So long may that continue, in my opinion, but make sure that you're buying the right property for your situation, because you definitely do not want to be topping up mortgages significantly when there's no capital growth. Otherwise, that'll suck the fun out of investing pretty quickly. Topic number 5 from interest.co.nz on the 15th of July. New Zealand should destroy the idea that the economy is linked to house price growth. Housing Minister Chris Bishop says New Zealand must shift its economic focus away from house price growth and towards productivity-led recovery. While acknowledging this shift may be difficult short-term, he sees it as essential for long-term stability. The government is working to dismantle the idea that rising property values should underpin economic success. Though this mind shift will take time, Bishop believes progress is underway. According to the Real Estate Institute of New Zealand, house prices fell for a 4th consecutive month in June and are up just 0.3% year on year. Not surprising, since we are in the middle of winter at the moment. Despite lower interest rates, spending remains subdued as buyers remain cautious due to job insecurity and an oversupplied market. Sellers now have limited pricing power, which means it's a good time to be a buyer. Economists say that this weak price growth has blunted the impact of the Reserve Bank rate cuts. Typically, falling rates boost asset values and household spending, but current conditions have muted that effect. My thoughts on this are that it's more the economic climate that is muting the spending. When people are concerned about potentially losing their jobs, they're not going to rush out and spend a whole bunch of money in the economy. They're saving more. And people who are in employment are using that to pay down their mortgages to strengthen their financial position as well. BNZ's Stephen Topless noted that while rate cuts have stopped further price drops, they haven't revived growth. Flat property values have stalled household wealth and spending since mid-2021. Kiwibank's Jared Kerr believes more rate cuts are needed to boost housing demand, a key driver of economic growth. The bank predicts a 5 to 7% rise in property prices through 2026, though similar 2025 forecasts have yet to come true. Given the property sector's $1.6 trillion value, house prices heavily influence consumer confidence. In other words, when your house increases in value, people feel wealthier. Without price growth, households tend to spend less. Still, Bishop wants to reduce this reliance. He sees stable home prices and falling rents as positive signs, especially for first-home buyers. He criticised media narratives that treat rising house prices as essential. Currency analyst Roger J. Kerr said economic pessimism is overblown, noting that monetary policy effects typically take a year to kick in, if not longer. Since rate cuts began last August, he expects stronger retail and housing activity soon. Kerr also pointed to strong exports and rising business confidence, forecasting 3% growth by the end of 2025, which is well above the RBNZ's 1.8% estimate. He argued that overemphasis on property prices distorts the broader economic picture. Don't wait for the market to take off again. Understand how to build wealth and security, no matter where we are in the cycle. So join me at one of our free events called How to Succeed with Property Investing. These are all available online, so you can gain valuable insights and strategies tailored to today's market conditions, regardless of where you live. Whether you're an experienced investor or just getting started, this free session will help equip you with the key tools and insights to make more confident, informed decisions. Don't miss out. Register today and take the next step towards achieving your financial success. In our free events, I'll also tell you more about how we could help you as a client to achieve your investing goals. So if you're interested in finding out more about what we can do, visit propertyapprentice.co.nz today and register now. If you've already been to one of our free events and would like to know more about how we can help you on your individual journey, book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website, propertyapprentice.co.nz. Thanks for listening. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing!